Okay, traders, welcome back. Here we have the weekly time frame of GBPJPY. GBPJPY. So what we're doing here at Liquid FX, we're beginning to experiment between different pairs, seeing what people like, seeing what people don't like. Had a request recently for US CAD, and hopefully I delivered a good market analysis for US CAD. Here we're doing a similar thing for GJ, right? So GBPJPY. So here on the monthly time frame, let's begin to break things down from an ICT perspective, or just from a higher time frame analysis perspective, right? What we've had over here, right? We've had price give us our all-time high up here. This was back in 2007, right? So this is our all-time high, ATH, all-time high. And now from here, what we can see is we see price had ripped down since, giving us a break of structure over here to the downside. So this was our bearish break of structure, but then we had an opposing break of structure, a structure to the upside, a bullish break of structure. And since then, what we've had is we've had price give us a consecutive break of structure to the upside. So we've seen price break structure over here. Now, let's discuss what we see over here. So we see a low over here, right? Does this low break the previous low? No, it doesn't, right? So what does that make this high? Right, this is something we teach at Liquid FX in the one-to-ones. I was going over it with a member of mine from South Africa. The question is, sorry, Jamaica. So the question is, what does this high represent? Now, this is a weak high. Now, the reason why it's a weak high is because it doesn't break the low. It doesn't make a new low, right? So the low is down here. So this is the low of the market, right? On the weekly time frame. This is the low of the market. This high fails to actually make a new low. So this high becomes weak. And weak highs are targeted highs, and hence why I've got the dollar signs next to it, because the dollar signs, as we know, represent liquidity. So if we just take this to the right of us, what we see is we see a line, a red line over here, which represents that large liquidity pool, right, on the weekly time frame. So if anything, the bias for the weekly time frame is bullish, at least getting up to this red line, sweeping this. But look what we have over here. We have a weekly fair value gap. So if I just go back now to the left, we have an impulse move downwards that left a fair value gap over here, right? This is our inefficient pricing or our fair value gap. Now, because of that, we have two reasons, and the only two reasons why price would move up is to sweep liquidity in at this point over here. So the weak high over here that failed to make a new low, and we have a weekly fair value gap over here. So these two things give us enough indication that we are higher time frame bullish on the higher time frames for this reason. So if we go down now to the daily time frame, we can begin to dissect our daily structure, which has been put on the charts. So our daily most recent structure is pretty obvious which direction it's moving in. We've had consecutive breaks of structure to the upside. So we've had a break of structure here. We've had breaks of structure here. And we've had one more break of structure just over here. So your GJ structure should look something like this, right? Few things about structure we need to note. We want to see a break with a body, right? So we want to see body breaks, right? Body boss, just for short, right? BB or body boss, right? We want to see a body boss. Now, with that being said, our higher time frame or weekly weak high is up here. And we have a fair value gap up here. So we're looking for longs, right? We're looking for buys, we're looking for longs. Couple of things to keep in mind is that we have some inefficient price action all the way down here, right? We have inefficiencies over here, bullish imbalances which haven't been mitigated. Now, the chance of those being filled, considering we're quite close to a weekly higher time frame narrative of bullishness, right? With our weak high being up here, it's quite unlikely price would come all the way down to here before continuing higher. That's unlikely, right? But more recently in price, we have a fair value gap just over here. So this is how I actually mark up my charts. I look for areas of fair value gaps, right? Simply put, I look for areas of fair value gaps and I look for areas of liquidity, right? On the weekly time frame, we have an area of liquidity. We have fair value gaps all the way up here on the weekly, right? So what we're looking for now, considering we've just broken the last high, what we're looking for now is we're looking for price just to rip higher. That's one option. Or we could see price head down lower, filling a fair value gap and continuing higher, right? Filling a fair value gap, which is over here, before continuing higher. So this is how we're looking at the markets currently on GBPJPY. So if we go down now to the lower time frame, let's see how we could have got involved in a potential long entry because we're long on this market, aren't we, right? So how can we get involved in this market, right? Were there any long positions this week? that we could have got involved in, right? Just looking at price action over here, we had a long trade over here just by analyzing price and looking at it in detail, right? So we had two entries. The first entry came here and the second entry came here. So we're going to dissect this entry over here in front of us, right, in terms of time and price. So we're going to be looking at time before price, right? So time and then price. So here we have the Asian range. So the Asian range represents liquidity, and this is known as the accumulation of the market, right? The accumulation phase. This simply builds liquidity in the market, right? So liquidity is built up through this range. Now, like I said, we're going to be looking at time and price together. What's the time of the Asian range? Now, the Asian range, keeping it to New York Standard Time, varies from 8 p.m. to midnight, right? 8 p.m. to 12 a.m. Eastern Standard Time or New York time, right? Important to understand. Very important. Now, when we're in a bullish market, what do we expect price to do when we're in a bullish market, right? So we've had our Asian range accumulation. The Asian range represents that accumulation in price, and that is here in gray. Now, the manipulation is the next step, and here we have our two-phase manipulation. We can either have a one-phase or a two-phase manipulation, right? So what we see is we see a sweep of the Asian high, then we see a sweep of the Asian low, followed by a break of structure, and we look to enter off a fair value gap, right? And that's exactly what's happened. So we have our manipulation phase one over here in yellow. So this is manipulation phase one, or I'll just call it M1 for short, right? M1. This is one of our unique entry models at Liquid FX, right? So this is manipulation phase one or simply M1. And this represents this price action over here. So this is our M1. So you have to ask yourself, what is the purpose of this M1? Now the M1 entices early buyers, right? And now this is going into the London, pre-London or London session, right? So this is London or pre-London, right? Or pre-London. Now the timing for this in the in Eastern Standard Time, I have to reiterate, this is Eastern Standard Time. You're looking for this to happen to occur from 1 a.m. Eastern to about 5 a.m. Eastern, 4:35 a.m. Eastern. This is important to understand. This is the manipulation phase one. We entice early buyers into the market. Now, as you can see, London rips down. So when we see this price action over here, we see price rip down over here before giving us a shift. On the lower time frame, we can get involved. So now that we see price head downwards, what we're seeing over here is we're seeing early sellers get enticed, or we're just seeing sellers get enticed, and we create our Judas swing over here. Now, the Judas swing represents the second manipulation phase, or you could call it the M2 or the turtle soup, or simply the manipulation. So to keep it simple, I'm going to call this the M2. This is the same as the Judas swing, and it is the low of the day in a bullish market, right? It is the low of the day in a bullish market, okay? Now, the last thing we want to do to keep the entry model really simple is we want to look for a fair value gap to enter off. We want to look for a fair value gap to enter off, right? We see over here, so if I quickly get rid of the schematic over here, what we see is we see a fair value gap over here in price that we could have entered off. Now, some people have very correctly identified this fair value gap, but we also have this fair value gap over here as well. We had a fair value gap get created over here. Right. So you're going to be asking me, oh, which fair value gap do you enter off? Which one do you enter off? Now the answer to that is, from a probabilistic standpoint, it could be any fair value gap, right? Price could rebalance all the way down to here and continue. In this case, it only rebalanced sort of halfway down to here and continue. Now, you have to ask yourself, where are the orders in the market? Now, when you're talking, this is a silver bullet ICT trade, right? So based off silver bullet timings, right? Silver bullet timings in the New York session, right? Silver bullet timings in the New York session are 10 to 11 a.m. Eastern Standard Time. So this trade was based off the silver bullet, which typically has a higher probability of getting mitigated than fair value gaps outside of the silver bullet. So that's a little gem when it comes to the ICT fair value gap selection, right? So what you'd want to do is you want to enter here off the fair value gap. Sorry, not here at this point. You would want to enter long off the fair value gap over here. So this is our 4 p.m. UK time, so 11 a.m. Eastern. You want to enter off our fair value gap over here. Safe stop loss below the wicks over here at this point. And as you can see, this was a lovely trade, not taken live because I don't personally trade GJ myself, but this is more for the analysis perspective, how you can get involved. We see a nice 2-hour trade, 2.5-hour trade, but it really ran, right? So this also goes to show you the power of partials. Where do you want to target with this trade? Well, that's something we went through right at the start of the video, right? Because we understand that we have a weak high up here on the weekly time frame. So this could be a really nice swing trade, right? Obviously, you want to take partials along the way, but this trade could run all the way up to that red line, which we established, the weekly weak high at the start of the video. That's a 1 to 26 or 1 to 27 R trade if we were to reach there, right? But obviously take partials along the way. But overall, we had a lovely, lovely trade, right? Lovely, lovely 2 to 3 hour trade, which gave us what we're looking for as traders, right? Short gains in and out, 1 to 4, 1 to 5 hour trade, right? So this is an overview of how I trade, the very basics of how you can get involved with ICT concepts. We go a lot further in the community. We dive into different types of entry models, how to build a high time frame bias, and we give one-to-one sessions for different people, develop their plans and systems because trading's individual, right? So we develop their plans and systems to allow them to trade the markets from the lens of an ICT trader. So if you like this video, give it a like, give it a thumbs up, share it, and what else do you want to see, right? I don't mind going over different pairs, different strategies, different models. So anything that people want to see, I'm more than happy to get involved. And until then, I'll see you at the next one.